Whatever. We're gonna skip the intro. Now, 3 minutes before we start. The music front and center. It's looking good there. All right. FOMC is coming out. So remember, we're gonna do the impact line the moment it happens. Come through and measure our risk interval. It's like a little bit of a kind of revert to mean going into FOMC. So I'm gonna draw these bands the minute that event happens. Make sure you got your financial juice front and center. The tricks are absolutely nothing happens in the first 30 minutes. The first trick. The second trick is nothing happens in the first 5 minutes. Let the market do its thing. If you drop and pass back to the starting point or rally and come back to the starting point, it's priced in. You forget about everything FOMC. Typically, the rate decision is priced in already. And so the press conference is where the real activity happens. You're going to wait for 30 minutes to get that. We'll wait for that as well. So the market usually moves in the first 5 minutes, knee-jerk reaction, the next 15 minutes, some positioning, and then when the press conference starts, that's where everything happens. So we're going to get front and center, watch our news. All right. We'll come out. I'm going to have this guy off to the side for the commentary to come through. You good? How y'all doing today? This is my little small Apple position. Deciding if I'm gonna actually do anything at all. To it. We're going. I just made a new video on Doomsday. Make sure you guys go watch that. I recorded it in the off time. One more minute. Okay. What do we got today? Where's my calendar here? Oh, looks like the FOMC just had a little bit of a pop. Okay, so here's how you do it, right? We're gonna go right to the tick chart. We're gonna go right, see how it already priced itself in. So that's basically it. At 13 o'clock, that candle started 13, 9, 13, okay. So right here at about 38.56.70. So that's where I'm going to draw the bands. 38.56.70. Reading that upper DD band, which is exactly what you expected markets to do based on DD this morning. I'll draw that kind of lower area as well. Remember, it's not necessarily off of that candle start. I have to go into a tick chart and really kind of hone in on that exact moment in time when the event happens. And this is a little bit crazy because I think our swim is always getting a little goofy whenever we get to the FOMC stuff. So if we do the timestamp right here at exactly 13 o'clock is when that event happened. And so I'm going to move these up just a little bit. So you use your So 3/4 of a basis point, which is expected. Market's moving really rapidly off of that. Looks like my apples are moving, making some cash here. On my other swings, moving pretty good, I guess. Not putting too much faith into what I see in the first couple of minutes, but I say I'm very bull-minded, very long all the things. Hit that like button, you guys. Click that like button. There's that DD right on the edge there. Let's go. Take a look at the VIX and Rocket Scooter. We are irrational outside of 38.84 on that band. So we're going to draw a catalyst irrational band. I am long NASDAQ. I am long QQQ. I'm long QQQ. I'm long Google. I'm long Apple. Same old, same old. You guys know my position. The upper doomsday band, we don't bet that you go irrational, so that's literally where I should probably close out my position. The volatility starts dying out just for the scalp. That's good. I like making money. Let me see. Catalyst. Rational. Right? That's it. Did you not catch the move? Oh, yeah? No, but you don't, like, trust me when I say it's not the move that matters. It's the press conference, okay? So this is just that there was no unexpected worsening, and that's not a beneficial thing. Don't try to catch any move. The market's going to respond very violently. Now, at the upper end of that band, it's a great time for me to start thinking about taking some profits. Patience. Give it 30 minutes to run. We push outside the irrational band, right? Irrational at the bottom as well. This is how that works. Everyone smash that like button or I'm cutting out the stream. I'm counting to 10. If I don't see 50 likes, I'm going home or going back to bed and chilling, taking a nap. Click that button or count. Ready? I'm gonna take a sip of my San Pellegrino. Smash it hard. Love you guys. Let's go, let's go, let's go. Hit that impact, hit that run length red line in previous. Okay, remember, watch, we're at the upper band. I don't need to bet on anything super crazy. It's that outlook that really matters. I don't think they're gonna come through any bad decision. Good news, bad news is good news, etc., etc. This run length has been clobbered. We're gonna delete that. Oops. How many of them are there? Oh, there we go. Okay, let's go ahead and make ourselves a new impact off of this current run. I mean, we are bouncing at that doomsday band. I'm okay with not being too eager. I do have those in the money apples. Let me just flatten them and take profit on those guys. Just because, I mean, I got lucky on the move. Let's say put a little bit of that in my pocket. I'm currently long QQQ, December 9th, 310 calls. So that is my play for the longer haul. I'm holding on to them and I will reveal my position later and you guys are gonna gasp if I end up being right. I'm gonna make y'all wait though till the end of the stream for we do it. Let's get ourselves a risk interval. I'm sorry, a red line right now as we're waiting. Let's go ahead and do that. It's about $1,000 for Apple, nothing too crazy. Okay, let's go back and look for any impacts off of this. Remember that basis, be patient. The press conference can come out. Market's going to want to move off of that. Okay, so let's go to that moment the market started moving, and you'll see right here, there she is. Here is your impact off of the event. Everybody see that? Rocket Scooter peeps, come here, click here, click there. Just like that. Now let's go higher on the time frame. It gets a little... Thinkorswim just likes to dance around and not just show me the current price. Why don't they draw the candles from right to left, right? There we go. Now again, this is not necessarily a rally off of the move, although I am long the market. At press conferences, usually it moves, and people are betting. Like I said, my thesis was that the market's going to squeeze higher because the market's too liquid to crash, and nobody is betting that the Fed's going to tighten further. So we're good. So there's a run length and impact. Now, I don't say that this is the time to start longing or chasing the market. We're currently irrational on the upside. I just longed at the bottom doomsday, right up to the top. Nope. Y'all want to see my position? We get up to 50. I'll show you. Let's fucking go. We got it. I'm long Google. I was long Apple. I'm long QQQ. Let me see what else I got on the plate. Remember, DD this morning. Was positive. It was 0.64 per rocket scooter, right? So DD in the morning, right here, it's an upper band tap. We went to the upper band and it's not finding a lot of support here, but the market doesn't necessarily move until we get to that press conference. Don't be, again, no investment advice here, but I promise you, if you do anything before 1:30, you're going to have a bad time. This is not the time to make decisions on the market. This is the time to wait and be patient. Right. Let me... It's likely going to turn around and reverse. It's likely not going to do anything. You never know. Let me get in queue front and center if I'm going to do some scalps and some futures here. We wait for the press conference. Just chill. Nobody be upset. There's a market's going to do crazy, crazy stuff. Go ahead and come back to Thinkorswim. I'm going to show you guys. Make sure you go to that rocket scooter. Go to here. You guys want to use our platform. I'm going to show you all of our trading tools. You made a bunch of videos last couple days. You're going to love it. We have a free trial for 7 days. Click that link. You can get right in the software immediately and start playing along with us and taking a look at what it is that we do here. Get back to the S&P. Again, market's back to being rational. Let's get back to the... let's look at the... It's a bear long up. Again, we have a bunch of clustered up areas here. Nothing really to say. Remember, we're going to wait for the press conference to start doing something. Powell's going to spin his same narrative about the labor market and other things. As we talked about before, one of the major turning points in this market, one of the major catalysts comes to the jobless claims, okay? First-time jobless claims are the reason... Oops. Right here. First-time jobless... If we're going to short squeeze in the end of the year, that's my bet. That's a really big bet. And again, like I said, if we get to 100, I want you guys to like, retweet everything. This stream, if you get this link out there and you get 150 people in here watching the stream right now, I will show you one of my secret positions that I have. It is massive, and you guys will think I'm fucking insane once I show you. I'm talking massive. I'm talking I'm swinging for the fence here. Going for one of those legendary trades, those once in a decade kind of trades. When the first time initial jobless claims tick up and tick up, the market has rallied because people assume the FOMC is going to tighten less or be less aggressive. Or tighten less, be less hawkish, be less aggressive, maybe even stop raising rates further, right? So as that decision comes through, if the jobs market is showing signs of ticking higher of unemployment, right? So basically these are first time unemployment filings. People lose their job or get fired. When that number ticks up, the market is rallied. I called a bottom in July to August. I called a bottom now for the rest of the year. The same thesis applies. It's because people that are short are going to take profits. Market's too liquid. Dealers need to squeeze out shorts to get buyers for their positions. If you look at the commitment of traders, very easy to see. We talked about this morning. Anytime the blue and green lines are pinching or pushing away from each other, the market is considered liquid. When they are pushing away from each other, you have people buying and people shorting. You have traders entering the market to make it even more liquid than if they're pinching together. So when green is going up and blue is going down, market is insanely liquid. Liquid markets do not crash. Green is up, blue is down, liquid markets do not crash. And number two is when dealers are positive, when dealers are not net negative, meaning that we've sold so much stuff to them and they hold the bag. They don't crash the price while they hold the bag. They need to get this long out of their pocket and into the hands of one of these two traders who have now entered the game. The blue line is sloping faster than the green line. The quickest way to find buyers is to squeeze the shorts. You will learn how to trade here, how the market really works. I said this morning we were squeezing shorts on this alone, and we were right. Been right. Doesn't mean I'm right on the trade, but it means that's the quickest way to find buyers. When this red line is less than 0, I'm calling a top for another 6 months. It's going to take about a quarter for them to redistribute that, which means the end of the year, we're pretty good. Okay. Again, the Fed is not going to aggressively press the market harder if people are losing their jobs, because if the Fed collapses the stock market, the Fed collapses the labor market to go with it, as companies will lay people off. And the Fed's QT will end up being the Fed's big bailout at the bottom of the stock market to prevent a Great Depression. There's no way in hell that Jay Powell wants to crash the stock market. So it's not that I'm right in the timing or the trade. It's just mechanically, while we are in a bear market, mechanically, the pieces don't look like it's... Now, again, the market can reverse and crash for the entire day, okay? Don't think that this is a testament the market has to rally today. What I mean is, the market is going to have a hard time selling off in this environment, even if it sells off for a day or two or even waves. Since the beginning of June, and it's now October, we have had a hard time finding lower lows because, well, asset managers have been buying, becoming more long the market. And so this is a palatable entry point, whereas in the middle of June, they became more long. And at the bottom of October, they became more long to get some stuff on their books before earnings because they themselves are anticipating this massive short that has not been this short since COVID. Even worse than COVID, the shortest the market's ever been. The dealers are going to have a very easy time likely squeezing those guys out to find the buyers. And it's just when and where they're going to do it. Maybe not today. Remember, no chasing the first 30 minutes of FOMC. Daddy's doing absolutely nothing and waiting for the event to come through. Thank you guys. I love you all to death. For the retweets and all that stuff. Okay. Any questions? Let's find some plays. Dag nabbit, Matt is smart. Yeah. I wouldn't say I'm smart. I just don't constantly stupidify myself by listening to what other people try to tell me. Wait, where's my... All right, boys, girls. How come none of y'all told me my shirt was inside out this morning? Because y'all just wanted to make fun of me by knowing that I literally crawl out of bed like... clean enough. Right? That's literally me today. I realized I was like, my shirt was inside out the whole first part of the stream today, or this morning. In theory, how would I play yes to the press? Nothing. Never play in the FOMC. Right now, look at what you have, and we're gonna do a monthly map of what the S&P looks like. We've got 11 minutes to do this. I'm gonna use Rocket Scooter Classic to show me what the S&P is gonna look like. We have a video on monthly map that's going to detail what the month is going to look like for the S&P. I'm going to pull a chart up, and again, showing you that while we do have, there's this run length red line that has been retraced. That is the entry point if I were to long to bet that the market's going to go higher, but I don't do anything till the press conference starts. If we bust out of this green line and hold it as support and volume support, that is huge news for the trade and huge news for the trade. I'm going to show you guys that I'm in. It's QQQ. I'm not going to lie. I'll show you what it is, where it is, what strike, everything. We get to 150 people today. So tell everyone to come in here. Notice that at the Irrational Band, we just did a video on Doomsday Bands today. You guys have about 10 minutes. Go watch this video that I just made because it's going to explain to you what it is I'm about to exploit for my trade today. Okay, the Doomsday is one of our fan favorites. It's an indicator that exploits risk interval. Go right here and watch this. So your impact line starts here, and then this is where we drew that line from. You see that? So I'm going to make my yellow line, first of all, breakout target from here. So I'm going to take my yellow line box on the S&P, and I'm going to put it right here. And again, when you do your red lines and yellow lines, you want to do them live, guys, just like this. This breakout goes all the way up to here. So again, if we continue to rally, that's a great target. Let me see that yellow line. Let me look at my strike on Qs to make sure I'm kind of congruent with that little setup here. Let's go ahead and mark this. We'll call it December contract. Show name on the right. Sure. Show price on the right. Okay. There's a lot of stuff you see on here. Ooh, microphone in the way. Okay. So any break, like I said, not that it's going to go there today, but that is the upper limit from this breakout. Every single time, those yellow lines are what you map out, and you can see there's one right in the proximity that we're trading up to and actually tapping and rejecting. You're always going to find volume pivots at yellow lines. And also another thing to note, again, so my high target is going to be 4069, and let's do a quickie math calc here. Right now the S&P is 3885 and SPY is 386.6.5. Let's convert futures to the index ETF. Let me get me old handy dandy spreadsheet here. Make a fraction. 3885 divided by 386.5 equals. Okay, I'm gonna show you guys how we're gonna do this on SPY. Get that fraction there. We're gonna take that and I'm gonna take 4069.91 to 4070 divided by this is gonna tell me that on SPY that's about a 404 level that I'm looking for on SPY. So let's do the same thing with Qs. Let's put NASDAQ front and center. We're gonna do red lines, yellow lines, green lines. Same thing on Qs. Doomsday run off of ES, off the catalyst. Yeah, so watch that video real quick. You got about 10 minutes to do it if you guys want, or just watch it later tonight. Let's go ahead and map out the some yellow lines on NASDAQ. And yellow lines on NASDAQ. They're not loading up. Oh well. Let's go to the event. The same thing. The tactic is going to repeat. We just had FOMC. We're going to map out some red lines and green line. I'm sorry, red lines, risk intervals, and yellow lines live. So as you guys see, you know how the technique goes. We're on a tick chart. You can see it right there. There's your impact. Y'all know what to look for. If you don't, go watch the green line videos. All right. As you see, this run length has been cleared. I'm going to leave it on there just to show today's move. We're going to label it. ES has already retraced its red line as well. Correct. Yeah. The show on the right, we'll call it IRL, FOMC if you guys want to label them. It's usually easy if you want to label them. I'm going to get rid of the little fib tool. I'll use a fib tool to draw just that midpoint area. This is a volume. So whenever the volume starts to decline, you want to be on the right side of this. Now when the press conference comes out, volatility is going to spool back in, so be careful for that. Now let's get back to QQQ. Daily. Oh, I did have some on there just really far. Okay, QQQ. Let's draw a box. Oh, there they are. I was wondering what time. Maybe just had a little bit of time loading up. All right. We're going to draw a box today. Remember, don't be so eager to do anything ever until the press conference. That's when the real activity starts. I'm going to go to our Discord. We have our Discord bots. Make sure, again, if you've not been to our Discord is free. Our Discord is probably the most active. We're certainly one of the largest Discords. I promise you we're larger than your Discord, wherever you come from. Like 3,500 people. It's free as well, and you can use Rock's platform for a week to check it out and try this out. We're gonna go straight down to the bots area. We're gonna go all the way over here to risk intervals. We're gonna know that NASDAQ, I'm just gonna write it on the screen so I can remember. 103.5 for the yellow. And again, the bot just gives these numbers. Yellow, it is 816.75. Okay. Same thing. Just writing here so you can remember. Come back around. I don't write on my own screen. It's just me. I'm just doing that for you guys because I love y'all so much. So yellow line distance, first thing that we do is we're going to take this box and just measure, make the box 816.75. How about that? Let's just make that randomly 200. 816, so he's 12016.75. There you go. Now I line up the bottom of this box with the bottom of this right here. Remember, if we get 150 people, I'll reveal my position. It's long the NASDAQ, but I'll show you how much it is. It's gonna blow your minds. I think I'm fucking insane. I am. Crazy. Don't know when to stop. Actually, I do. Actually really good at risk management. Don't let my theatrics confuse you. Very well planned out, trust me. Okay. So this guy, dead in the water. Anyways, let's just steal it from there. You don't normally have the FOMC reaction be a bull run like this. It's not usually the fact that it's moved irrational means it was unexpected or it was beyond the tolerance of somebody that's trading. Normally, you don't see the FOMC move this much. You don't break irrational catalyst rules. We have two rules flagging today. Irrational catalyst is one of them, and that means no new entries, especially on the short side, because it's about time to get squeezed on those guys. So shorts are getting squeezed hella hard today. FOMC yellow line, December contract, major, no, minor. Minor means run length has been touched. Major means it hasn't. Major is even stronger than minor. M on the right. Remember, we have two different kinds. Now, the difference between the two is that majors just assumed to have a lot more resistance to them. Okay, now let's go back and let's measure. So that's the daily chart. All right. Please don't tell me I need to do this again on the doomsday chart. You know I have one for NASDAQ. What is it called? Dynamic. Yeah. Oh. The indicator isn't there. Okay. So what I need to start doing is drawing these on the dynamic charts. Let's put them side by side and let's just repeat the process. Lame. Or actually no. No. Whatever. We'll just do that there. And we're done. Okay. Look at that. Sometimes I'm smart at things. There we go. Okay, let me make this big. We're going to take that 103.5 number and we're going to do an irrational. Remember, it's not the start of the candle. People ask, where do you measure it from? You got to go to a tick chart after the event. Notice that the Thinkorswim is kind of a couple seconds off. You always have to go to a tick chart. That's the trick to getting exact. Resiliences are screaming positive. That's super great. DD is 0.64, which means it wants to touch that upper band, which is great. I love it. Okay, let's go ahead and do the 103.5. We'll do the same thing. We'll draw a box. Distance 103.5. And again, Rocket Scooter is going to have all this stuff automated at some point, which is going to be great. We're working on, by the end of the year, all of these pivots will be automated for you guys. So I'm excited to do that. We're developing very fast. 11.303.5. By the way, if you guys want to stick around later tonight, they're going to release the Trading Camp podcast. Interviewed me last night. Should be revealed and released tonight. Just a story of my life, story of my trading, where I came from, where Rocket Scooter started, everything. You want to hear a lot. Talk about trading is really fun. I was really fortunate to have those guys care to listen to a story, see what it's all about. And you'll be able to watch that later on tonight. So remember, don't be too eager to do a lot of stuff until that press conference starts, which is now. There's the upside. There's the downside, right? Just like the upside target and the downside target. Let's do the green line here. We're gonna call it the same thing we did the S&P. Showing how to manually do that. Do you guys like that? It's very helpful. Financial juice, yeah, go to financial juice, you guys. So NASDAQ, irrational to the upside, irrational to the downside, right? I'm just gonna move this out of the way so that it's not covering up the candles that we're staring at. So 2 flags today. Number 1 is when you have one risk interval off the event, the market is irrational. Here's how good our risk interval bot is. Look at that bounce right on the nose. Look at that volume from green to green line. I mean, I'm drawing them in real time as it's tapping and touching those pivots. Easy to see that. Let's just zoom out like a tick chart. You can even see how awesome these pivots are as you bounce between them. The market is considered irrational on a catalyst. It's about to be irrational on its own hedging once it breaks through that line. So irrational, rational, our rules are normally don't enter new trades or try to fade against the herd. Again, do what you want. You know, bless you and good luck. Do anything you want to do. Stop rules are this. Market is irrational. I get out, stay out when I'm wrong, especially get out and stay out. I close out my platform, click that X. The best trade you'll ever do is to trade your sanity for some happiness, your insanity for some happiness. Get rid of that stomach pain of being upside down and close down, stay out, enjoy your day. Don't even look at the market. Don't even pick up your phone and go like, I wonder what's going on today. I'm gonna double check this. Like, put it down, stay out, get out of the way, learn to do that. Very helpful. So, irrational. VIX travels more than risk interval, which it hasn't. That doesn't check. If the S opens beyond the previous day's Globex outside the doomsday band or breaks through it, also considered irrational. Opens or breaks through it, actually trying to think. Yes, a catalyst exit a winning or losing trade 1 RI distance from the anchor point of that catalyst, which is risk interval number 2. If you break through here, the market is irrational. If you guys remember, I had a Google trade, an Apple trade, that when it just hit that upper band, I went ahead and closed it out and took the profit on that. Let's see if I can show you where that is. Where's my Apple? What the hell? Wait a minute. I have another Apple. I really need to pay attention to my trades. I closed out my I didn't know I had a second Apple. When did I do this? I had closed out my November 25th 100 apples. Oh, okay. I somehow have another Apple trade that I completely forgot about. Wow. Just because I didn't have it open, but I remember now that I do have another Apple trade. The ones that I had that were the expiration of the 25th, I went ahead and closed out at the upper band. So the minute we went up there and tapped, I just closed it out. No big deal. And see what I'm saying? That press conference is where the real meat and potatoes of the market comes about. So you don't go in there and start YOLOing the fence just because market pops on the FOMC. The smart thing to do is just to read the narrative and see what's going on. Powell slowing the pace of rate hikes will become necessary at some point. Clearly that's expected. Look, we're coming down to clear out that little bitty impact line right there. If we break through the impact line like you did right now, then all of the work we just did for yellow lines goes away. None of this is in effect anymore. So goodbye you and goodbye you. So once you clear that impact, which you just did, there's nothing else left to say about the market today. The market has completely closed out all effects of FOMC. Now normal trading will resume. Isn't that great? No longer is the FOMC driving the boat. Once you clear out the impact from the event, even the press conference has now balanced the imbalance of the market. Pretty cool, right? So that is gone. Therefore, the yellow line is gone. So pretty neat to see that I told you guys today the market's irrational, can do whatever it wants, and it goes all over the place, right? Pretty cool. So delete the yellow line, no more of that. And that's it. Irrational means irrational. That's happened in the lower band. Isn't that crazy? Let me clear off the charts here. I forgot about this other Apple trade that I had because I did not load it up on Thinkorswim until I saw it on my phone. I was like, oh, wait. So I had November 152.5 calls for November 25th on Apple, and I went ahead and closed them out when we got that first burp, just because stuff like this happens. Just a small position I had. 152.5 was the strike. We flew up. I closed it out. I don't know how many of these I have. It looks like I have 30 of those. They're really far out. Not really far out, but basically until monthly expiration. Let me refresh my platform here. Right, let me go ahead and close out the platform. It's getting a little slow. It's like on data feeds. Let me reopen my platform. There we go. There was a new release last night, by the way. I'll detail what we have. Looks like Apple and others are still trading here. We had a new release last night with a bunch of new features, a couple more strategies that came through. I will detail that to you really quick while we're waiting here. Strategies. No, not strategies. Let's go down to here. We had new links on the Rocket Scooter dashboard. You guys will see. I want to go in here and show you what we have. Go to the Rocket Scooter website. You can play along, follow along. Go rocketscooter.com. You can get 1 whole week free to use the platform and come hang out with us. You will see there are a couple more buttons up here. Take you straight to the liquidity map, take you straight to the live stream, take you straight to the strategy guys. They're just there temporarily to get you guys some a little more information as you land. There was some data pull errors that we fixed. There was the LMO fixed, which was showing the improper opening liquidity map for a couple of conditions. Little bug there. The idea that you have call walls above put walls, that is no longer mean reversion. Instead, it's a bull bear. Both are possible. And we have this little tiebreaker that we do. That guy's been fixed. The liquidity maps are expanded by default when you the right widgets are expanded by default instead of being closed, just so that you know there's more stuff over there. The DD number has been corrected since the launch to be accurate. It was off by like 5% because it was missing something. It was off because those other playbook midpoint case I just talked about was off, so the count was wrong. Added distance half gap parameters in the scanner. So now you can look for distance from half gap, I think is what he said. Added dist half gap to the parameters. Oh, I'm sorry, parameters. Okay. So now when you sort by things, you can look at distance to half gap as far as the parameters go. So say I want to buy some bull long up stocks and I want to see which ones are the farthest from their half gap. Look, resilience just dipped below and now is positive. Which one of these guys are right on the edge of their half gap? Interesting to see why some of them are zero. Let me check this out really quick. That's an interesting bug. Let me go ahead and detail that. Sometimes you get these weird artifacts that you can have. What is an infinity, right? How are you guys doing your trade today? Now's the time to think about what you want to do. Resilience is going higher and higher. Yeah, this is really odd, right? USO on the list, distance at half cap, and it's very odd, right? We have the data, so I'm gonna have him check this out. Just this one. Maybe divide by 0. So we added new videos to the website. So your thumbnails were there. They were a little blurry. But where your training videos are right here on the website, you'll see Rocket Scooter has more videos. The shorter videos we've been making to replace the older, longer videos. It'll still be there in the archive, but the shorter videos are 10 minutes a piece to watch each one of our techniques, and you guys will like that, I think, a lot better. Twitter Proof is telling everyone to all in long after the initial pump. Yeah. Still scalping like a boss. Up 94% is count. Owen, my man. Go for it, baby. In 1 second, I'm gonna go quickie break.
To make me smile at any time. There's someone waiting for me to be my lifeline. There's someone waiting for me. There's someone waiting for me. Someone waiting for me to make me smile at any time. There's someone waiting for me to be my lifeline. There's someone waiting for me, waiting for me. There's someone waiting for me. share my dreams.
My bad. Muted. So, who was right? Right here, Financial Juice. At this meeting, we discussed slowing rate hikes. What? Whose thesis was saying that when the unemployment filings tick up, they're going to contemplate driving that boat or that car as fast as they're doing? I literally said it on the Street podcast. I said it last night on the podcast. I've said it for months, right? If they slow down rate hikes, the response is likely to be short squeezing because that is the thing that is making the market bearish. Didn't I say, if that, you guys remember, right? Is that unemployment numbers were ticking up, that the Fed would contemplate how aggressive or how hawkish they are. I said that even before the event and today at the beginning of this stream. So as you see, as a trader, it's your job to try to predict something that somebody's going to say before they say it. It's not Twitter gurus longing at the top like a bunch of idiots because they don't know how to trade. They got to sell you paid discords, you know, $50 a month bullshit. And they're telling you long at the top. Instead, I'm training you to predict the future. Doesn't mean you're going to make the trade. It just means you're going to understand why markets move. And I'm just so tired of being right. I wish my trade would go, but y'all follow? It doesn't take a genius to piece that together. It just takes someone who doesn't listen to all that noise. They don't have a clear way of knowing when inflation becomes entrenched because inflation is not caused by anything they can control at this point, except for not damaging the labor market. Inflation controls itself as long as people stay employed and make stuff and keep the ball turning in the economy. Traders now price in a 50 basis point December rate hike. Easy as that. The initial move up is based on the Fed funds futures as people are anticipating the same thing. A lessening of rate hikes, which means the Fed is going to contemplate their decision to be ultra hawkish. That doesn't mean we're going to rally off this news. We could sell off for the rest of the day. As you see, everything here is exactly... Weren't you guys here, right? You can be a little fat yes in chat if you remember us calling this almost like a play-by-play, every single part of it. Ready to change policy is needed. They downgrade the likelihood of 75 basis point, which means they're likely to do half a basis point. Or 50, sorry, and they're going to keep doing the same thing because if you start seeing people losing their jobs, they're not going to aggressively raise rates and crash the market. They need to let it bleed out a little bit. Okay, moving that off the screen. Again, don't try to make big decisions off the event. You wait until the press conference and then you make your play. I say that every single FOMC. We've been trading this, trading FOMC live on stream for going on 6 years now. So make sure that you guys understand that COVID created a legion of educators who have probably never traded more than the bull market of COVID. So now we're crashing out to the irrational side of the market, right? Let me pull this up really quick. There's the bottom side of the catalyst, right? We're testing both sides of the range. Is this a sell-off signal? Maybe, right? Market's very irrational to the downside. And now we got to do downside yellow lines in the same fashion. I have a small position in Apple, nothing really big. There is an impact here, likely. Market just collapsed onto that. Yeah, absolutely. My Googles are for like 6 weeks out. So I've got a lot of time on that. I'm waiting for the market to get as nasty as it can to really add to my position. So right now I'm just trading light, like 30 contracts at like $1 a piece. That's 3 grand. Nothing too much. Down like 30%. But in reality, this trade's bounced all over the place today. It's a swing. It's a swing for monthly expiration, so I'm just gonna hang on to it. Things will be okay. Okay, I'm back. So I had the I had girlfriend aggro. What? Sorry about that. Had a girlfriend aggro. Talking about our fitness studios we go to is about to open up like a grandfathered in deal. So we're looking at. Let me read some of your comments because I'm actually catching up. Put my glasses on. Jabal said pausing me premature. Yeah, I mean pausing is premature 100%. They're not going to go in there and start go there and start stopping their policy, but they're going to start turning it around, which is very bullish. As a matter of fact, this is probably a long entry point right now. I'm curious. I want to start adding to my Apple at this point. I like what I see. What should I want to do? Let me double check Apple. All right, let's take a look at S&P at monthly hedge pressure. Resilience just flip-flopped one way, flip-flopped the other way. This is very... Okay, so here's another thing where Rocket Scooter come into play, right? The S&P can fall really hard today. There's nothing between here but a 100-point drop to here. It's not a good sign for things. Let's double-check UVXY because there's a call wall this morning, and you pass through that, markets become ultra-bearish. And glasses are going to be on serious mode today. So we're good as long as we don't break through 10 on UVXY. Yeah. Scary, right? Likely so.
Nothing to admire. When I was a kid, I felt connected to my rock star. When I'm getting older, there's nothing to admire. Yeah, we get fire. Yeah. When I was a
Yeah, I think the problem will come from the volatility starts to compound on itself here. I'm liking the idea that I don't want to bet that the market becomes ultra bearish from here. I might start adding to my Q positions, but let me look and see if I got a good entry point here. Thank you. Let's keep an eyeball out that UVXY doesn't break through 10, right? If I get above monthly hedge pressure, then I'll be ready to long some more Qs. Biden's about to speak as well. Yeah. Watch Sleepy Joe jolt the market. Okay, so you understand, remember FOMC, you ignore the first report, or you ignore the report, and you ignore what happens, right? And then the press conference is where the real move comes from. I'm glad you guys are learning that. Every time we shout the same thing. We teach you how to trade every single thing here, every single type of thing here, and we're glad to show you how all this stuff works. If you guys have not checked out the Ruxer platform, please check it out. We love to share our wisdom and knowledge with people. We also come with a full algorithmic platform. All of our indicators predict volume. We're completely spinning the face of technical analysis. We're glad that you guys are checking us out. Yeah. If I get above monthly hedge pressure, I'm back. I'm loading up on Qs. That. So you wait, and then you find a thing to strike on. If I want to be bullish, I need to get a bullish opportunity. Monthly hedge pressure, resilience on the S&P, slightly positive. Let's add QQQ on there as well. Right on the border. So it's not looking good because they're both negative. I anticipate this probably to sell. I don't like this. But let's watch them both. SPY, if we do fall and the S&P does crash out, that's a big fall from here. That's 100 points plus some because this will break. So we got the old S&P needs to stay in there and hold in the game and we'll be fine. Biden's about to speak. Let's see if Biden has anything good to rebound the market. I don't know how many people here, how many people have significant others, right? They're like, can I get an energy drink so I can go work out? I'm like, yeah, sure. She came back from her workout. So it's like about this much gone. You buy these things, like a sip taken out of it, and they're just sitting everywhere. Sparkling waters, all flat. I guess she drove me an energy drink to drink. Call those floaters. Yeah. I need to start making girlfriend discard sangria of all the half glass open energy drinks plus waters plus bottle glasses of wine still sitting there. Can make that. Y'all never see my glasses on anymore. I tend to rough it. My eyes get really tired. Like, ooh, what a delicious drink. Oh yeah, I just gathered all the San Pellegrinos, half drink monsters in that rosé you didn't finish last night, girl. We mixed it together and made some sangria. Market's not looking good on this pullback. But yeah, everyone out there calling the long at the top and market's irrational. You don't bet that it becomes rally or a sell. You don't bet on anything if it's outside the band. You play from band to band, which you saw me do. I was long Apple. When we got to the top of the risk interval band, y'all watched me close that Apple. Those November, whatever they were, 25th. That's all I did. Had a small position to trade on the way up. Oh, it's these guys right here. This is the one. Does it show my... Oh, let me... Oh, you know what? I need to... Gotta show my fills. And that was it. I got long that thing. I don't know where I bought those guys. Somewhere back in here. I can't remember exactly the price I paid. It should show I guess I sold. Oh, it's not going to show. Because it was yesterday. Actually, sorry, it was last week. These November 25th, actually, I've been holding for a while. I think I actually bought those a couple weeks back, if I can remember correctly. That's still the last remnant of my original trade, the one with JP Morgan, Nvidia, all of those guys. That's the remnants of that. I think that was the last one. So when we got that pop, you see what I did? Right near the top, I sold. All the gurus in there trying to long at the top, I now sold to free up that cash. Now I'm gonna take that cash and throw it in the NASDAQ, right at the bottom. See, that's how trading works. Easy as that. Well, the trade's hard as fuck, but not being stupid. It's easy to not, it's easy to be stupid. It's a little less easy, but still easy than to not be stupid. I mean, I don't know. You think you see something that you're gonna get in on top, and somehow all you're expecting is another wave of idiots to come in behind you. They're less smart than you are. That's what you're really anticipating, right? And you see me doing nothing because I'm expecting the market to look a little blah because it's irrational. We had some really nasty dips. Now we're stabilizing with res less than 0. Market's not looking too hot today. If for some reason we get a second challenge of monthly hedge pressure, then that's all good and golden. My Googles are only 100 strike, and they were about 6 weeks out when I bought them. So 100 strike on Google is to fill in the half gap from the earnings. It's aggressive to think that we would do it within the quarter. But I'm being bold and aggressive at this point in my trading year. So 100's not far off. The time might be off. That's not even to fill the gap. That's to say that the market stabilizes and I get plenty of time to get there. I can, if I get to 100 by here, that's my goal. It's just a swing. I'm going to sit on it. Unless I get signals that the market's finding lower lows, then I'll probably just close it out. Let's do some liquidity map. Apple. Make sure you guys, thank you for tuning in. Y'all hit that like button. Y'all like it? Okay, cool. So today, any recovery of hedge pressure is a squeeze. As a matter of fact, breaking hedge, and breaking hedge is something that you don't normally see. So if you break through another time, that is a solid rally, especially if you recover 150. Okay.
Is there a war in your mind? You just can't decide to be by my side.
So I'm just gonna keep my options open today just to make sure my options of what I want to do open. I don't want to short the market, but us being below monthly is not the best sign of the world. Of course, losing that into the end of the day is probably a bad sign for everything. I'm not shorting. I'm a firm believer that the market rallies to the end of the year. I think that the expectation is that bad news is good news. So people are ready to sell and fade. The idea that the Fed is still raising rates in December is bearish for some, but the idea that the Fed is raising rates less likely to be 3/4 or 75 basis point, probably be half, right? 0.5 is less bearish for the bears, then maybe that is more bearish for the bulls. So after we get through this initial volatility, after today, I'm going to see how we close tomorrow and the next day and the next week. Got plenty of capital from my first wave up on those trades. Remember, I closed out on Friday of last week at the high of pretty much all my positions, which is the high of most things, which is really good. That was the 22nd, 3rd, 4th, 5th, 6th, 7th, 28th. When I started closing out my JPs, I started closing out my Nvids. Pepsi, I had JP, Nvidia, Pepsi, Apple. And can't remember everything. I think I'm missing one. Oh, SPY. I had SPY or QQ1. Maybe I think it's SPY. Go back to my tweets, it'll show it. We're back above monthly hedge pressure. We're golden boys and girls. So I'm going to tell you something. I don't know if I should reveal. Like I said. I said at 150 I would reveal, but maybe at the end of the session I should reveal. See, right now, guys and girls, this is the long signal I want. Monthly res is greater than 0, but res is less than 0. So it's going to bounce around a couple times. Remember, look at the resilience. If yellow is positive, that's support, that's resistance. So now it's going to show me that the current orientation is this can do that for a little bit. And then if res goes positive, then we're back to longing, and then we're catching up to here. All the Fury is longing at the top. Oh no. I'm going to be mean to everybody here. If you paid someone who's 25 years old or less to teach you day trading because they talk to you in a Discord, you're a fucking idiot. And you're gonna lose all your money to me trading. No offense. You might as well just send me a check now, because it's gonna whittle away in your trading account to other traders who know what they're doing. No offense. I love y'all, but people are saying like the Furies are calling long at the top, and I'm sitting there like market's irrational. I'm going to sit down and let it do its thing. Let the algorithms do their thing, and now make your decision. Right now we're at a decision point. The market's going to determine what's to be bullish or bearish for the year. That's it, or for the month. Sorry, we're going to keep an eyeball on this number right here. The S&P resilience is right on the edge. Okay. It's the one that controls the market, and NASDAQ is also on the edge here as well. Send me a check and save the save the commission, save the headache and the heartache. Okay, look, this is what we're waiting for. The volume spike. When the volume spikes, that's the interaction with hedge pressure as people are capitulating and flip-flopping their positions. When this volume starts to decay, whatever side we're on will lead for the rest of the day. Okay, so give me about 3 or 4 more minutes to decide if it's gonna break hedge or not. Resilience is less than 0. The answer is likely not. Right. I know some people like to pay for that camaraderie to trade with like people that are just fun and outgoing. But in all honesty though, I wouldn't listen to people's call outs or people's plays unless they post like a yearly broker statement, right? That shows that they make money for the year. I don't know. I guess I just bet my investments better than that. Like, oh bro, you should buy this house for me. It's really good. Oh yeah, tell me about it. I mean, you know, it's good. There's like windows and doors and stairs and stuff. There's a roof. Oh yeah, can I see a picture? Nope. No? So you take my word for it. Give me your couple $100,000 though, or down payment. Promise, it's a great school zone. Oh yeah, what's the name of the school? Can't tell you. Can't tell you. Okay, well, I really want a house, so here's the money. That's what most of you do. Y'all are idiots. I love you, but you're idiots out there. Even $20 a month to lose 100,000 of your life savings to some child. You kind of deserved it for being stupid, and I love you. You deserve to lose all your money if you do that. You don't deserve to have advantages in life by making dumb decisions with your money. You don't just fall into success through accident or through cheap or through silliness. You work hard for your money, right? Don't whittle it away in some guru Discord. I'm probably not gonna make this trade. Volume's declining. We're not getting that hedge pressure burp I want. Don't like it. I love you all to death too. I love all of you. Some of you less than others, but most of you I like a lot. I don't like a lot of people, so that's a good thing. Don't be dumb. Don't go out there and pay for Discords. We need your 50 bucks that bad because they got bills to pay. Doesn't matter how whatever, but if they do show their performance, then it's worth listening to their call outs for sure. If they don't show their performance and you're out there buying a money pit. What do you call a money pit? Like a house that just is like nothing but broken and things are wrong. It's on top of like an ancient burial ground. It's haunted, like the house from American Horror Story. You feel that love, bro? Oh yeah, oh yeah. Love you too, man. So much. I hate when my thesis is right but my timing's wrong. I might have to take a loss on some of these positions to shuffle them out a month. When it's doing this, I don't like what I'm seeing. I don't like that the idea that after the press conference we're getting a not so favorable result when I was expecting one. So my thoughts here are I might need to find the next update we get to start repositioning out. I need to give myself maybe till the end of December. Again, I'm gonna give it 1 or 2 more days to make that decision. But we do have on November 3rd, tomorrow, another jobless claims data point come out. And we've been on the steep rise since, I guess, the end of September, beginning of October. It's just been ticking up, you know, 4 weeks in a row. Have been higher than the bottom at the end of September. So I like that. I like that noise. I like that data, but a lot of it might be noise. So we'll see. But that resilience just kind of tapering right now. What are the stocks that are moving the worst? JP starting to solidify. Let's check out Nvid real quick. Oh. Nvid. So I'm looking at some of the higher market cap stocks and where they could bounce. Nvid has hedge pressures here. Let's take a look at some of the let's look at any of the bullish ones, but we're also going to sub-filter by anything. So things that are risky to fall to bring the index down further, things that are above half gap, things that have broken down through MHP. Let's look at all of them. So yeah, that's a little bit aggressive to think of both of them. So how about just ones that are broken through half gap that are above MHP now? So let's look for the ones that are right there. We can do distance to half gap, which I like. Guild, Amgen, IBM, FJP. That's neat. These are ones right on their half gap that could possibly sell because resilience is less than 0 and fall to hedge pressure for a bounce. If I wanted to buy JP, I would scoop some up right here towards the end of the day, but we don't trade in the last hour of the day, last 2 hours of the day anyways. So reality, there's nothing to say here. Nothing to do. I'm gonna let the market just settle out and decide what's gonna do. No new positions. We don't trade off hedge pressures last 2 hours a day anyways. And so we're not getting that run. But a lot of the stocks are just stabilizing off of that initial impact they priced in the FOMC, and they're now sitting where the FOMC was, where they were before the FOMC. It's good to see that. Okay. It's a good sign. See some of the stocks wanting to move here. All right, I'm gonna call it. Watch that VIX today, guys. This is the only thing that matters. And the market will spiral out of control. The S&P will fall 100 points into close if we get a runaway VIX from here to here to there. Okay, be very careful today, which means I need to be very careful today on my cues. For Google, after today, we're going to run a monthly map in the morning, and we'll see what Google looks like in the morning, right? The monthly map today, it's almost the end of the day. There's not much information that we're going to get from it. It's not going to rapidly change tomorrow. I've been doing a monthly map in Google. And let's do classic app to show y'all how that works. Okay, let me put my glasses here. Ooh, feel sexier. Yeah. To the 4th. Let's talk about how it's changed since the last time we did the map. So it's going from 99 93. So it looks like Wall Street's appetite is not going to be bullish so far into this trading month. I'm not liking what I'm seeing. I don't know if we find lower lows. We might spend 2 weeks figuring that out. So I'm not liking my swings anymore. I'm going to have maybe 1 or 2 days to decide how I'm going to reposition if I do. Oops. So what I'm doing is I'm showing the change from yesterday to today. The way we'll show in Rocket Scooter is to show that after FOMC, right, that volatility is less going to these Friday options, just to show you volatility is expected. But we are clearly in bear side going to tomorrow. This is, again, another thing I don't like. 11. 14 and 97. What's interesting to see is that you're getting shit like this, right? It's like after FOMC, the market's looking sunny as hell. Like, I don't... We're still bearish. So Google looks like the pathway is bear market squeeze at the best situation. I'm connecting the dots, right? So, you know, the positioning is whenever the market hits this edge on this Friday or that edge on that Friday, I'm going to close out at less of a loss and reposition to a new date in the future, right? So I don't like to just sell at the low unless I get a reason to. But we clearly are losing that bull edge on some of these stocks, or that breakout is not looking so hot. So 107.5 to 125 on monthly. So my 100 strike is still within the realm of the bear market squeeze. I could get lucky. Right, so we call this bear market rally, right? Bear market rally. Because it's rallying in the bear market. So as you see, the bulls are willing to be bullish lower, which is good. After this is what Friday looked like yesterday. This is what Friday looks like now. This price, there are bears way up here, and now there's only bears here. So the bears have become less bearish. The bulls have become more bullish. They're kind of expected after Fed. People are generally been bullish lately. Here is a really strange jump, in that where people are less bullish than they were, and going to be bearish much higher. So the sentiment is shifting from slightly more bullish, to slightly more bearish, just going into this week. And then here, they're kind of like neutral, right? So when I look at this, I tell myself, okay, well, we need the timing. My strike to fill that gap, because I like to look at those gap fills, which would be like 100 to 110. These are where those gaps are. 100 was a half gap, and 100 doesn't seem to be very possible anymore until the 18th anyways. So the fact that I got like 2 Fridays out on the 9th, no, the 18th, how many weeks is that? 3 Fridays after that is my strike. I get plenty of time to decide if I want to get there. Now again, 100 is not that far off, you know, it's like a 10% run. It could take 1 to 2 weeks to get there, but as you see, we're only taking the second data point here. Oops. It's still bearish here. Right? It's still bearish there. Still bearish there. There's no bullishness until here, right? So the stock after bad earnings is obviously not going to be really bullish. So it's liquid in the middle. So my targets, like my strikes, you know, typically I'm going to aim for out of the money options somewhere that's going to fill a gap in the liquidity zone. The market's going to test the liquidity pocket on a squeeze. Sure, we'll get there. I'm not going to buy out of the money calls so that the market's bullish. So if I had 140 strike Google calls for the 18th, I would know that it's very impossible, because you don't go from bull to bear side without a countering catalyst, right? So if I had 140s, 140 needs to be in here on the bear side because we're in the bear side now. I would need that move. So does that make sense, Money Tech? So, not to give you advice on your position, you have November 24th. Which is here at 110. If I were in November 24th, 110, I would know that it's going to likely take 3 weeks to get there without a catalyst. And I'm going to lose most of my theta if it does get there at best. It can squeeze up to that level. Yes. If I had 130... If I had 125, 130, 140, I would literally be closing them out now and repositioning to something a little less aggressive in the bear zone, like hundreds or 95s. That's how I look at it, right? So I look at how it's changing from day to day and how the landscape's changing as people are changing their ideas. Now, again, I can't give you advice on what to do on your trade. One of the rules we have is you don't bet that you go from bull to bear side or bull to bear side, vice versa, without a catalyst. Well, we already had the earnings report, and it's going to take a lot to get that to move through that zone. You can get a squeeze that will look to fill gaps that are in the liquidity pocket, which is what I like to do. And on Google, that's why I have 100, which is like where that half gap was. And half gaps are great testing points in bear market rallies. I knew that the market was going to be unusually volatile going through FOMC, so I gave myself many extra weeks. There's that 100, that's why I picked it. Half gap. All right, I'm going to call it. I'm going to get out of here. See you Brian early tomorrow. Watch that UVXY10 call out testing right now. Job for runway reaction. Drops the market 100 points in a day. Don't get caught upside down in that. All those gurus at long to the top. You follow them. Don't you wish you wouldn't have had to spend $20 a month for them to blow up your trading account? You guys. All right, we'll see y'all tonight. The Trading Camp podcast comes out. I'll be featured on there. They're gonna interview me, or they interviewed me, talked about, you know, my story, my trading, my life, rocket scooter, everything. You guys can tune in, take a listen to that. It's you care to hear what some rando dude. So going into next month or next week, just anticipating how the volatility has changed. So I'm gonna look at the rightmost ones, and then in Rocket Scooter we could have a thing where we can show like the previous days and the next days. That'd be kind of cool to show. And as it evolves, right? You see the evolution is that the market is still really liquid here. Obviously, if it goes to fill in this gap and go higher, that would undo what earnings did, right? From 110 when it fell. It's very unlikely that you'll rally up to that earnings price. In the best sense of a scenario, what I look for is for us to rally and fill the latest gap fill, which is at 104. And this half gap from here, from the call, sorry, this earnings are here. This half gap is a halfway point right there in the call, and it's still in bear territory, which is good. So we can get like hedge pressure squeezes, like 1 or 2 day rallies to just poke their head up there, and I go in the money and I close out. I don't know. They'll give me the link and I'll send it on over to you guys. I'll ask the boys where it's going to be. I know it's on Apple and a couple other places, but let me let them know. It's on Spotify. So if it was in bull market, right, the bull market is supported at a higher entry point, right? So as the market, as the month goes by, bulls need more confidence at a higher price to be bullish. So when you see it like change from higher or from lower to higher like this, but people are willing to be bulls at 100 like within the next week, but people are not going to be bulls on the 11th at 100. Instead, they want to be at 115. Now, as you see, as 100 goes further in time, it's getting closer to being bearish. So the bulls are losing confidence as time goes out. Okay, so Spotify for the audio podcast and YouTube for the video podcast. You can just watch me. And at that time, my shirt wasn't inside out, so... Episode 53. Spotify for the audio. This one right here for the video one. So go to the Spotify one and check it out. And DW posted the Spotify. All right, we love you guys. We'll see y'all tomorrow. Good luck and have a good one.